Web Marketing That Works, episode 74, where on today's show I'm talking with Toby Carlisle, who's a hedge fund manager, blogger and author.
Welcome to the Web Marketing That Works podcast. Come behind the scenes of real-life marketing experiments and listen in as amazing guests confess the truth about what really works. Now, here are your hosts, Adam Franklin and Toby Jenkins.
Hi there, and welcome to the Web Marketing That Works podcast. My name is Toby Jenkins, and thanks so much for joining me. This is the show for people who love marketing on the web, and today you'll be hearing my interview with Toby Carlisle. Let me introduce you to him. He was actually in the year ahead of me at school in Brisbane, and since then has gone on to found an investment management company in LA. He's also written 2 books, with a third on its way and a 4th in consideration, so he's a prolific writer. He's won Australian and US national media coverage and has now started a new business called The Acquirer's Multiple. And in today's show, we talk about what has worked, as we always do in these shows, the good, the bad and the ugly. So what's worked and what hasn't, and we dive into some details, particularly around the secret to how he turned his blog from unknown to a highly credible source, the importance of headlines, how he is able to write 1,000 words per day, and also exactly how he is connected with top influencers through Twitter, and he loves Twitter. This show is brought to you by our book, Web Marketing That Works, and specifically the bonus 33 free templates that go with it. You can download them from bluewiremedia.com.au/book. Let's jump into it. So, Tobes, it's great to have you on the podcast, mate. Thanks so much for joining me today.
Thanks for having me, Tobes. It's wonderful to be here.
It's good to have the 2 Tobes on opposite sides of the Pacific here. Where are you calling in from?
I'm in Los Angeles, in California, USA.
Yep, glorious, glorious. Well, mate, before we jump into the business and marketing part of this discussion, I'm really keen to know sort of what excites you, what fires you up each morning, what gets you out of bed?
Well, aside from the kids.
Yes, congratulations too. Number 2's just arrived.
The toddler gets me out of bed every morning, bright and early before the sun gets up.
Brilliant.
But I love the puzzle of investing, and I love all of the business that sort of goes along with running that kind of business. That's what I find really fun.
Yeah, sure. Okay. And so let's hear a bit more about your business then. Yeah, can you walk us through sort of where you're at the moment? Because there's an existing business and there's a new business coming online. So give us the background to the 2 if you can.
I have an investment firm in Los Angeles called Equum Investment Management, and it has a fund and some separately managed accounts. And in promoting that business, I've written a series of books. The first one was called Quantitative Value, that I wrote with a guy who was in the process of getting his PhD at the Booth School of Business, which is the old Chicago School of Business. And we basically went and got all of these sort of fundamental value investment papers that had been written either by industry or academics. And we built a system that we could sort of test them over like 50 years of stock market data. We found some that had stopped working and some that worked really well. And then we wrote about that process in a book called Quantitative Value that was published by Wiley in 2012. And it got a really good response. It's still available in Amazon.
And sorry, was that before you started the business or once the fund was up and running?
The investment firm was running, but the fund hadn't been established at that point. The fund was established to basically exploit the strategy that we examined in the book. And so we came up with this sort of final strategy basically for picking stocks on a value investment using a value investment type framework. You know, it was a sort of semi-academic type exercise. And in going through the process, I found some ideas that I thought were a little bit different that might work a little bit differently. So I wrote a second book called Deep Value that came out in August last year. And that's sort of more about the stuff that I find really interesting, which is kind of really beaten up, ugly businesses where they've sort of attracted an activist or a private equity firm. So an activist is someone who buys a small shareholding.
Yep. Any famous activists that people would know?
Carlisle Khan, maybe.
Yep, he was involved with Apple, right?
He was, yeah, more recently, yeah. T. Boone Pickens was probably one of the original ones.
Okay.
sometimes the leverage buyout guys like Kohlberg, Kravis, Roberts, they were sort of more well known in the 80s, but they were sort of a raider in the 80s a little bit too. But the idea is basically that they try to find some fundamental problem with the company. Typically it's management, and they go in and they buy a position and try to influence management to do the right thing to the extent that they're not. And that typically results in an improved share price, and that's how they make their money. I just found that a fascinating process. So I wrote about what they look for and how they buy their positions, and that was the second book.
Right. And so that was the Deep Value book.
That was Deep Value. In Deep Value, I discussed this idea called the acquirer's multiple. So the challenge with any sort of investing idea is that they can be complex. They can be too complex. And so the challenge is to sort of boil it down into a single metric or ratio that sort of really describes the big muscle movement of what you're looking for. And for Deep Value, it was this thing that I've called the acquirer's multiple, which is basically like the price earnings ratio that these activists use to identify really deeply undervalued companies.
Right. And so that's a single figure made up of a couple of different numbers, I presume?
So what it does...
For the novice, for the complete novice here?
If you've ever looked at... So a price earnings ratio is the market capitalization of a company, which is like if you multiply the share price by all of the shares that are outstanding, that gives you the market capitalization. And then the earnings are the reported earnings that fall to the very bottom of the income statement with everything else taken out. And the reason that it's a very good metric, the price to earnings ratio, but it can be improved upon pretty substantially. And that's what the acquirer's multiple does. And it improves upon it two ways. One of them is the market capitalization doesn't describe everything that you actually have to pay for if you're like an activist or a private equity firm that's taking over the whole company. Because if you do that, you have to take on the debt. So you're responsible for paying for the debt. You can access any cash that they might have at the bank, but you're also responsible for preferred stock, underfunded pensions, all of these different liabilities. And so on one hand, it tries to capture the real price that you pay. And then on the other hand, you've got control over the earnings, so you can direct where they go. So it looks for this number called operating earnings, which is basically the accounting measure of the cash flow as it's really coming into the business. Then they can direct it to paying down debt, paying a dividend, lots of different things that they can do with it. And so it looks at it on a rawer basis, unfiltered by all of the things that get taken out through the income statement. And those two numbers together, if you test them over a very long period of data, the acquirer's multiple gives you much better performance because it's sort of a much more X-ray look into the financial statements than the plain old price earnings ratio.
Gotcha. And so who is that? I mean, obviously this has been a concept that's been built on with your first book and now your second book, but who is that sort of targeted at, the acquirer's multiple? Who are you trying to pitch that to? Who's your audience?
There's a few different audiences for it. So I've set up a website called theacquirersmultiple.com or acquirersmultiple.com. And so on that site, I take all of the data for US companies and I put it through my own screening software. And it gives me a list of companies that come out the other side. So there's a free version of it where the top 1,000 companies are examined and then I throw up the top 30. And so anybody can go along and have a look at that. So that's sort of self-directed investors in the States. Just retail guys who want to run their own portfolios are welcome to use that. It's free. And then I offer on top of that a paid service that if you want to look at the smaller companies that typically are the ones that generate better returns, then you have to pay for that service. But then the idea is to create the acquirer's multiple as a sort of standalone brand by itself and then to raise money to implement that strategy, basically. And that can take a variety of different forms. One of them is this thing called an exchange-traded fund, an ETF in the States, which is basically like a listed investment company in Australia. So somebody could, as an investor, you can go to your online broker and you can type in the ticker for this ETF, and then you'd be able to just buy it like a stock, buy it like a listed investment company. And so that's the sort of secondary audience. That's a more long-term plan. The first stage is sort of building up the brand, and then the second stage is the exchange-traded fund, the ETF.
Right. And so where are you at now then with that sort of process?
The site's been built out and it exists.
Yep. We'll make sure that's in the notes.
And the book Deep Value, which basically describes the strategy, came out in August last year. So the process now is just to sort of prove up the site, acquire as multiple, and sort of get sufficient traction, sufficient users of that so that there's sort of a ready-made audience for the ETF when it's created.
Right. And so you've got the free product where people get access to those first 30. Who is your target audience in terms of who is buying the paid service?
Typically, it's self-directed investors.
Okay.
So anybody who's running their own portfolio who...
Does that include sort of big guys or...
I can see when people sign up. I can see the email addresses of those who sign up. So there are a lot of email addresses that I recognize.
Yep.
The really big guys, they have their own processes. They have their own screening software, and so sure. And they pay anywhere from kind of $3,500, $5,000 a year up to sort of 30, 50, 100 grand a year for their screening software.
Wow.
So for those guys, that screening software that they have access to, it's perfectly customizable to look at whatever aspect of the financial statements going back a period of time that you want to look at.
Yeah.
For most people, that's not going to be very useful because they haven't got the expertise to sort of know how to manipulate that screening software. Mm. And so I'm sort of looking for the guys they want to do some value investing. They've looked at a variety of different value investing strategies maybe. And, if they read Deep Value, they can, or Quantitative Value, they can see, we've gone and done a lot of the research and we explain the nature of the research that we've done and what the results are. And then we've sort of boiled all of that research down into a single screen. Mm. And that's what the Acquirers Multiple site does. Yeah, right.
And so the two books are kind of essentially lead generation for your website?
And anything else that might go beyond that. But that's Deep Value is basically for the website. And it's still quite a substantial academic book. And sure. I think that I'll need to write...
is book number 3 going to be the Acquirers Multiple?
Unfortunately, I'm contracted to Wiley to write book number 3, which is another book called Concentrated Value that'll be out probably next year. That's due in a month or so. The fourth book, which I think I'll self-publish, just because it might be a little bit. It's going to be a little bit shorter, and it's sort of the equivalent of a children's book for adult investors, I think. That's the sort of image that I have in my mind, like the Hungry Caterpillar or something like that. Because now that's what I read the most of every night.
Oh,
the Very Hungry Caterpillar.
Yeah. I guess explaining it as simply as possible, isn't that the sign of true understanding?
And I think it's a good idea too. I sort of think that as much as I like writing the really complicated books and getting stuck right into the nitty-gritty of it, I think that pushes a lot of people away because it's just they just don't have the time to get their head into it. So they just want, just give me the bullet points. Give me something that I can read in half an hour.
And do something with.
Yeah, that describes the nature of, and, give me pictures. And that's what I like looking at too. I mean, I look at some books that are, they look like textbooks that we had to study back at school. And it's just, your heart sinks when you see the size of them.
Yeah, right. Tobe, thanks for the insight into the business and how it works. The new business, Acquirers Multiple, as a website as well. It's really interesting. So one of the things, this show is really a lot about marketing, and yours is a very interesting product. We've never had a fund manager or a financial expert like yourself on this show. So there's plenty of lessons to be learned here. But one thing you did that I noticed particularly was as you were promoting your book, which clearly, funnels into your website, you did a great job of earning yourself media spots and TV. You've also been running your blog called Greenbacked for a long time, actually, haven't you?
So I launched Greenbacked in 2008, and basically it was just to write about a lot of the stuff that ends up being in Deep Value, yep. Like little activist positions where they were deeply undervalued, just because I found it really interesting. The activists in the States, when they get to 5% of the share, so they buy enough shares, 5%, they have to file a notice called a 13D notice, and they attach to that notice often a letter describing what they see as the issue with the company. So they're sort of called poison pen letters, or they've got different names, but that's one of them. And they're fascinating. Sometimes they're sort of really rude and they're really fun to read. And they just point out all the things that were going wrong. So I was just basically getting them and sticking them up on the site and saying, look, this thing's really cheap and these guys are having a go at it. And so it got pretty good reception and the site grew pretty quickly. And I think it's got sort of 7,000 subscribers now, and there's another 5,000 on Twitter, which is not a huge number, but for a specialized sort of
that's an awesome
financial
niche.
site.
Yeah.
I think it's pretty good for the little niche that it is.
Mm.
I think by virtue of the fact that was a lot of the reason why they were prepared to let me have a go at the books, because they sort of thought there'd be a ready-made audience for it. And then I think that also helped get some of the media. And we had a PR firm, but I aggressively promoted it too. Like when I was back in Australia, I contacted Peter Switzer. Peter Switzer's producer. I had one of the guys who I knew put me in contact.
For those who don't know, Peter Switzer's on Sky Business, right?
Yes, he is.
Yep.
He's got Sky Business, and I think he might even just be on Sky News. He's on like 7 p.m. at night. Anyway, it was a really fun interview. He gave me sort of half an hour, which I'd done a few in the States by that stage. I'd done Bloomberg and Yahoo have a web series, which is great actually, and a few other, The Street and a few of these other things. And it's kind of, they're like 2-minute segments, and they ask you 3 questions, and it's all sort of really hyped up and high speed stuff. But Switzer is kind of, he was a half-hour segment, and he had plenty of time, and it was really fun. And he's a smart guy, so we got stuck right into the nitty-gritty of it.
Yep. And mate, just to take that one step back, so how did you approach him, or what was your process for sort of getting those, the Bloomberg interview and that kind of thing? You say you sort of marketed it aggressively, but what does that actually entail?
Well, part of it was, I had a PR firm who were contacting these guys saying there's a new book out, sending out copies of the book, for free to people, and then sort of saying that I was available to talk about subjects like if Carl Icahn was doing something, which he regularly is. That was I knew that he'd be doing something over that period.
Gotcha.
If you need an expert to sort of comment on what he's doing, to explain the nature of what he's doing. So I got
So tying it to something that's already newsworthy.
Exactly.
I think that's a great lesson, actually. Thanks, Tobes, for sharing that.
And so I got, it'd be like the New Orleans affiliate of NPR wanted like a description, and so I'd get on the radio and talk for, a few minutes about that. So that was a pretty good one. The other one was just when I got to Australia, I just came back on vacation with the family, and I just thought I didn't want to waste the long flight out without sort of doing something to promote it while I was back. So I was hitting up all of these news groups, trying to get some news time without any success at all. And I was just complaining to a mate of mine at lunch one day saying, I just can't get on anything out here. And I sort of thought it might be an interesting story to have an Aussie who's in the States on. And he said, I know the producer of Switzer. I'll put you in contact.
Nice.
So it wasn't very scientific, that one, but
who you know makes a big difference, eh?
Yeah. He's one of the guys who was doing, the Sky Business when they cut 30 seconds to some guy who tells you what's happening with interest rates or something like that.
Right.
He was doing that, so he hooked me up there.
Oh, that's great. And so a fair bit of that, with a bit of help from the PR agency goes a long way. And I guess, were you involved with sort of picking your target as to who you felt your message might be best suited for, like picking those influencers, or?
Yeah, I had a long list of like everybody from the Wall Street Journal to, Bloomberg to CNBC, which are financial television stations, and Wall Street Journal to newspaper, Financial Times, like all of those. And then, lists of the editors who might either be interested in activism or who might be interested in value investment, and to a lesser extent, sort of personal finance, and just sort of wrote a little blurb up describing the nature of the book and blasted that out saying, if you'd like a copy of the book, let us know. So anybody who sort of didn't really care, we didn't follow them up at all, but anybody who sort of was like, yeah, we'll take a look at the book, we sent them a copy of the book and then followed up. So we had a pretty good idea where where the leads were. And a lot of those, it wasn't a huge hit rate, but it was enough to I was pretty busy for about 6 months.
Yeah, right. Oh, that's awesome. That's unreal. It's exactly what you want. And so you sort of built that list yourself, but I guess on the flip side, on your business side, then how did you go about sort of converting and building your own list in terms of your emails and subscribers to your blog, for instance? How have you gone about sort of capturing that interest?
The blog's been a huge part of that. So anybody who goes to the blog can sign up to receive it as an email, or if you've got a WordPress website of your own. So the WordPress is the software that I use to drive all of my little websites, but the Greenbacked, which is a free blog, it's a WordPress site. So if you're a WordPress blogger and you go there, you can follow it, and you can sort of, it's like following someone on Facebook or something like that.
Yeah.
There's a little Facebook presence, but I think for something like what I'm doing, Facebook is sort of less useful and Twitter is really more useful, because it's sort of, I don't know if this is right or not. You probably have a better idea than me, but I feel Twitter's a bit more businessy and Facebook's a bit more sort of, social.
And
so
I think particularly for your kind of audience, like if you're talking to investors, I see sort of Twitter as really being newsy as well.
Yeah. And
business, definitely. But that sort of breaking news idea for you when you're talking about shareholder activism, there's an incentive of, like, time is really important, and timeliness of information is really important to a lot of people, isn't it?
Look, Twitter is incredible. And I signed up for it when I signed up for it like early 2009, and I didn't really know what it was or how I was supposed to use it. And I just kept on like playing with it. And it took me probably until, I don't know, late 2010 or 2011 to sort of really get into it and work out what it was about. And the thing that I love about it is it's so flat in the sense that, so I have these guys who I thought were super smart when I was a younger guy, and, reading about the books that they'd written. And, if on Twitter, if you follow them, a lot of guys just follow you back. Like I often try to do that. If there's anybody who's financy or value investing or anything like that who follows me, I follow them back. And so if you follow someone who follows you, you can direct message them, so you can send them a little message. So I had this guy James O'Shaughnessy, who was, I loved his book. He wrote this book called What Works on Wall Street. I think it came out in the mid-90s or something like that. It's pretty well regarded as an investment classic. I just love this book. And just one day, randomly, I saw that he was following me, and I was following him too. So I dropped him a note and said, I love your book. And I've got this one coming out too.
140 characters or less.
Yeah. Well, I had to send in this sort of barrage of tweets to get the message across. But I was like, I'd be honored if you'd take a look and endorse my book, because that's another thing that's really important for book success, is sort of getting people saying nice things about your book who have got some sort of profile. Mm. So he sort of, even though I kind of like just forced myself on him, he very obligingly agreed, and he gave me this really nice endorsement. And so he's sort of the first guy on my dust jacket on the book, which is super cool. That was really exciting.
I think, connecting with, as you say, heroes, essentially, for want of a better term, but connecting with those the people whose work you admire and that kind of thing is just an incredible part of Twitter. I love Twitter. I think it's probably my favorite of all of them.
That's the reason I love it so much, just for exactly that reason. And you can sort of interact with them. Like if you have something interesting to say, and this is, from a purely mercenary view of like attracting followers and making yourself look like an expert, interacting with these guys and having them sort of follow you and interact with you is a great way of doing that. But in order to sort of get them to do that, you have to have something interesting to say to them, and you have to be careful about the way that you engage them, because they are still, often they are sort of titans in a sense. In my world, they're pretty impressive guys.
Yeah.
And so I have to be careful about how I thread that needle. But that's been a big part of, like, a lot of these guys are very generous and they will engage. And I think that's part of being regarded as sort of an expert, which is part of what I'm trying to achieve.
Yeah, absolutely. No, I think it's interesting you say that, and I think the care and the thought that goes into making sure that your content is interesting, and that it's very different to approach someone like him and say, I loved your work in this book, Thanks so much. It's been really influential, and I would be honoured if you wouldn't mind having a look at mine. Like, that's a very different proposition to, just tweeting him and saying, "Oh, I've got a new book coming. Can you have a look?" It's a relationship process, isn't it? It's, you wouldn't say that to him in a bar.
No, well, that's true. Like that, that's something that Twitter does well. That it gives you that. It does give you that opportunity to do that, whereas you would never do that in a public space. Although, having said that, I get people now doing that to me all the time. They just send me like their 500-page manuscript and just say, "Tell me what you think and give me an endorsement if you like it." Like that. But like every day, probably not every day, but every week I get one of those, and every day I get one of the things that I get a lot from younger guys saying, "Give me a list of things to read," which I don't know. I would never have done that to anybody else. But I always think, I've written these books that have got, every chapter has like 100 citations in it, and there are probably 25 chapters. So there's like 2,500 citations. Like, work your way through those. Come see me.
Oh, mate, that's brutal. Maybe they're just looking for the top 10, mate.
I would never say that. I always think it's funny.
There's a blog post there though, Tobes.
There's a blog post?
Yeah, you write a blog post of your top 10 investing books.
Well, I think it is a great idea for a blog post.
Mm. We've actually found that, answering questions that you get asked all the time is a great way to sort of generate content as a way of generating content.
That is smart.
For one, people are searching for it and they're looking for it. And for two, there's an actual need there, even if it's just a handful of people who are looking for your top 10 list of investing books. Those 10 want it, as opposed to just purely taking a punt on some other idea for content that you've got.
The thing is that I've gouged the highs out of all of my favourite investment books to write my books.
Yeah, that's okay. That's what everyone does though, right? Everyone stands on the shoulders of giants.
Yeah, true.
But mate, the other thing is, you have been a prolific content creator. You've blogged, you've written 2 books, you've got a third on the way. Mate, you've got a busy month ahead of you to finish off this 3rd book, and you're considering a 4th already as well. I'm really interested to know, what's your sort of content creation process, and what disciplines do you follow and habits do you have? Because this, I know, again, this is a question we get asked all the time, is, how can I ensure that I have time set aside for creating content? Because that's the piece that can't be outsourced.
Partly for me, it's a sort of an outgrowth of reading. I think you've got to read lots and lots to get an idea about, what the edges of the argument look like. So I think you have, whatever your particular subject is, you have to have an idea about what are the different views about the way that you could invest. So about the way that you could do whatever it is. But in my instance, it's investing. So the way that I think about it is, in an academic sense, the orthodox view, or the view that everybody subscribes to at university, this is what you're taught when you go to university, is this thing called the efficient market theory, which basically says it's impossible to beat the market. Then the value investors come along and they say, well, that's not quite true. It's true in most instances, but there are going to be some things that are trading at a big discount to their intrinsic value. And if you buy these over time, you will outperform. And that's what the academic research is now sort of starting to show. So in one sense, that's one sort of axis of the argument that I think about. And then in a value investing sense, there are sort of different edges of that argument too. And one of them is, there's a sort of Buffett style of value investment, which is looking for very high quality companies that are going to grow over time. And then there's another style, which is the deep value end of it, which is looking for ugly companies that their fundamentals are going to improve, and there's going to be some improvement in the discount of the share price. And so taken together, you get some good performance. And so I'm always engaged in those sort of 2 debates. I'm interested in what the other side's saying. So I'm looking for guys who are talking about stuff. And then if I can see something that's interesting, then I'll try to give my perspective on it. And I think that just automatically generates a lot of content, because there's endless, views on the other side. And you can just sort of pick them up and discuss, and that just gives you an opportunity to that generates content, and it sort of establishes you with one particular point of view, I think. And that's a good thing. Yeah,
I think taking a stance inspires debate as well, doesn't it? Do you get a lot of comments on your blog?
It varies. Does it? It depends on this. It's kind of funny that the stuff that I spend a long time agonizing over and kind of polishing. And I think that that's a really smart, valuable contribution that just goes completely ignored. And then one day I'll just have this thought like this, that's a nonsense statement. So I'll just call the guy out or like do whatever.
Yep.
And it's like a 5-minute post. And that's the thing that just inspires this like firestorm of like pretty angry debate, to be honest.
Oh, that's good though, isn't it?
There's that great line, they say in academia, the debates are so vitriolic. I think something like that. The debates are so vitriolic because the stakes are so small. I think investment's a little bit like that too. Like nobody's really going to be doing anything on the basis of these arguments. So they have these violent arguments with people. Like I get these emails. Sometimes it's crazy.
Oh, mate, that'd be good to see some of those perhaps didactic violent responses to your. That would be hilarious.
I can tell you one really odd one that I had. The guy's quite close to me in California. He was he was a lawyer who was struck off or suspended out here. And then he went into money management. And so somehow he's got a fund and he's got people giving him money. And he just, for whatever reason, he thought that it felt like every blog post he was taking personally. Like I was personally writing him these, and he just started sending me these emails. And it got up to I'd got like 70 of them, and I just had to block every possibility that this guy could respond to me. I went through my email list and I found his name, and I had to delete it out of the email list. It was crazy. I was like, after 50 emails, don't you just want to give in and like not follow me anymore?
Jeez. Oh,
Too much energy.
Yeah, that's powerful stuff. You obviously striking a nerve with someone there, mate.
The stakes were so small, like I was saying, completely irrelevant, just one of those things.
Mm. So when do you do your writing then, Tobes?
First thing in the morning.
Yep. And are you up like before the kids, or are you...
Well, it used to be that I woke up really early and I'd just start writing. And then like by 9, I'd have half of my writing done for the day, 3/4 of the writing done. And then from then on in, it was just sort of editing and making it sensible. Mm. But it's much harder with the kids because they need to be fed and then looked after for a period of time. So I still have to prioritize it, though. I just think it's one of those things that it's just writing is really unpleasant. It's hard to do. The first draft is really, really hard to do. Mm. But then I find for me, it's really hard. But I find editing really easy. I always think I'm a pretty good editor. I'm an awful writer, but I'm a pretty good editor. But if I don't have anything to edit, then, I can't show what a good editor I am. So I just write this utter garbage stream of consciousness down. And then I go through and I kind of try to make it sensible.
And are you the kind of guy who does that immediately, like won't check email, won't do anything else, but just write first up? Is that your discipline to it?
I think you have to write first because it's so easy to get trapped into all of the administrative stuff.
Yep.
And the administrative stuff is much better to be done when you're tired at the end of the day.
Yeah.
And I try to knock it all over then. And then when I'm fresh in the morning, and it's one of those, it probably comes from one of those success books, it's like I think it is from like, I don't know which one it is, but one of those, like the American, like how to get rich type books where you do the first thing, do the most important thing first.
Yeah. I think there's a reason why those books sell, and probably because there's some truth, a lot of truth in that, I reckon, as well. It's true for me. It definitely is true for me. Mm. And do you follow any other sort of routines in terms of getting into that writing headspace?
So, sometimes it's worth reading. I just can't help but look at Twitter because it's just, I have it open on my desktop and it's just running through all day long. And I have the guys who I follow who've, one of the nice things about it is that there is that newsy element, but there's also that commentary. So I look at some of the commentary that's coming through just to see if there's anything interesting that's happening. Typically that's not very helpful. That's probably something I shouldn't be doing. I think you're probably better off. Well, Hemingway his process was to read what he had previously written and then to start writing. And so I think that when I start working, that's what I do. I read the sort of, I think a good rate is like 1,000 words a day. So if I write 1,000 words, that probably only takes 10 or 15 minutes to read. Mm. And then it takes, that takes an entire day to write, but 10 or 15 minutes to read.
Yeah, gotcha. Oh, nice, mate. I like it. So just a couple more questions, Tobe, and then we'll wrap up, mate. This has been really interesting to hear how you've operated because, I mean, considering it's such a unique business, I guess, in terms of the fund that you've got and now it's sort of looking at the acquirer's multiple side as well, certainly compared to other guests that we've had on, it's quite a different industry. I'm really interested to know, in amongst this process, has there been anything that hasn't worked for you?
There've been, of course, there are lots and lots of dry gullies. The big thing really for me has been just the structure of the business. So I started off with this fund, which is a limited partnership based in the States. It's incredibly hard to raise money into that structure because of the nature of the legal documents that you have to sign. So part of the setting up the acquirer's multiple and then the other things that come beyond that is sort of pivoting the business away from that a little bit to something that is a more investable proposition. Yep. And part of that is sort of educating people about what the thing is going to be that they're going to be investing in. And so I think, that's the fundamental one, really. So part of that is just, I'd come from Australia into the US without really fully understanding what the thing was that I was creating in terms of the fund.
Yep.
So the investment management business is, it's a trust thing. People need to trust that you're going to be competent at what you do, honest, all of those sort of things. And so that's quite a long lead time to get people into that part of the business.
Yep.
So I'm trying to sort of go about it in a slightly different way where rather than looking at me as the person that they're dealing with, they're looking at the brand, the acquirer's multiple and getting comfortable with that. And then it's less sort of dependent on, it's less dependent on me.
You as the manager.
Yeah.
From a marketing standpoint, is there anything that hasn't worked for you or any sort of glaring things or anything that's really surprised you that has worked really well?
One of the great things about having a blog is being able to test out little ideas all the time. So it's sort of, my blogging sort of evolved over time because you can see that there are things that people like to read and there are things that they don't care about. And so where initially I was writing, the things that people wanted to read was maybe like 1 in 10 posts that I was doing. Now I try to concentrate more into the stuff that they want to read. So I only try and do the stuff that somebody's going to be interested in reading. And that hopefully that inspires some debate, which then inspires another blog post. And that's been a lesson, changing the headings. So changing the title. So I used to write these terrible titles, really esoteric garbage titles. And I realized there's this great book, Ogilvy on Advertising by David Ogilvy, which I read and I own. I've read over and over the years, where he talks about back when they wrote these long copy direct marketing type ads, that basically there were 3 structures for titles. There was, you wrote how to do whatever, you wrote the secret of doing whatever, or you wrote the 5 things or the 9 things about, doing whatever. And so basically I try to stick to one of those titles every time I write something, because those, for whatever reason, you just read those and you read the title and you're like, well, this guy sounds like he knows what he's talking about, even though it's the same blog post, just under a different title,
Yeah. Interesting. Yeah. And I mean, I think I've seen, I certainly know stats, 80% is driven by the headline versus 20%.
They decide whether they're going to read or not based on the headline.
Absolutely. Yeah.
Is that right?
Yeah. So and I mean, open rates in emails and all of that sort of stuff. Your subject line.
Do you ever look at websites like BuzzFeed to get that? They have a formula for the way that they make their titles. It's not the archetypal formula of those 3 that I was talking about before, but they definitely have some sort of. And it must be working because they keep on using it.
Yeah, I mean, we're big fans of even looking just at popular posts on blogs that you follow is a great way of finding good headline frameworks and structures and easy ones to copy too. It's always easier to copy than to try to come up with your own. But Tobes, look, mate, thank you so much for all of this. It's been awesome. A couple more questions. Who do you learn from? I guess more from a business/marketing standpoint, but broadly as well.
Well, it's one of those, it's an interesting time in finance in the States that there is these ETFs are kind of blowing up. So in some ways that's sort of new, that's greenfield territory that they've been around for a little while now, 5 or 10 years, but it takes a little while for them to tip into the mainstream. And I think they're sort of at that point. So that's been kind of there's not a lot of there aren't a lot of predecessors in that area. For me, it's sort of it's been a long and difficult learning process. So I don't know if I'm slower than the average bear or what it is, but it's been interesting sort of trying to figure my way through the US system in any case. In terms of marketing, I loved Ogilvy on advertising, and I've read that pretty closely, and I follow a few sort of websites. I've got this great book by you, mate, that I've got it sitting on my desk right here. It's a web copy that sells. It's a ripper. No, it's not. It's Web Marketing That Works. Sorry, mate.
I was going to say, I don't remember writing that one. But
I've got two. Yours is on top, though. Web Marketing That Works. It sits on top.
Oh, thanks, James. Oh, you're on for that. And do you have a favourite quote or piece of advice that you use for inspiration?
Oh, that's a great question. I try not to sort of boil it all down into a single quote. The one that I do like, I think it's Benjamin Franklin, where he said something like, "Man is a reasonable creature. He can find a reason to do or say anything that he wants to do." I used to have that when I was swimming training as a kid, and I had to get up before the light came up. I'd have that above my bed, and it'd be like, there's no way that you can, now that you've seen that sign, you can't come up with a reason not to get up. And I still sort of use that. Anytime you don't want to do something, you can find a reason not to do it. So the best thing is to just go and do it.
Yeah. Oh, that's good, mate. I really like that. And finally, how can listeners connect with you then?
Few different ways. The blog is Greenbacked, which is GREENBACKD, like punked. So there's no E in there. And then I'm at Greenbacked for Twitter. Acquirers Multiple it's sort of just in soft launch at the moment, because it's got this infrastructure in the back has taken 6 months to build out, and it's been a bit of a nightmare. So the front end is now sort of just coming alive, and I just want to make sure the back end works with a little bit of load. So I think it's got, without sort of any advertising, it's got a few hundred people using it now. Yeah. And I'm sort of I just want to slowly build that out, but that's where I'm going to be focusing most of my energy in the very near future. So Acquirers Multiple, it's called ACQUIRESMULTIPLE.com.
Yep, great. Oh, well, thanks so much again, Tobes. It's been awesome talking to you, mate, and really appreciate the insights and you sharing your journey to this point. So thanks so much for joining me.
My pleasure. Thanks so much for having me on, Toast. It's been really fun.
It has been. Talk soon.
Okay, mate. See you. Bye.
That wraps up the interview with Toby Carlisle. Thanks so much for joining me through to the end of the show. I really enjoyed the fact that Toby made that point about the edges of a debate and the edges of an industry, I guess, really, where he found that he was able to inspire debate and really tap into newsworthy elements, things that were already going on. So he was then able to maximize his ability to get in front of a new audience and to inspire the debate. This show is brought to you by our 33 free marketing templates. You can download them at bluewiremedia.com.au/book. And our intent is to deliver actionable advice. So please let us know if you have any feedback or questions or guest suggestions too. We'd love to track down people you'd like to hear from. You can contact me. I am toby.jenkins@bluewiremedia.com.au, or I'm on Twitter at Toby_Jenkins. If you enjoyed the show, we'd also love you to leave a review on iTunes. Until next time, thanks so much.